All right. Hello, everyone. Welcome to episode 51 of Going Live with Good Soil. And for people new, we broadcast this live on Twitter Spaces and YouTube Live at the same time on our YouTube channel. So it's recorded on both sides. So you can go back and listen if you catch us in the middle or something. But anyway, last week I wasn't here and you had a guest host, Brad Ferguson, on. Matt, how did that go?
Pretty good, yeah. Brad's a really interesting guy. He goes by both Brad and Bradford, so I never know what to call him. But I think Bradford's a cooler sounding name, so I usually go with that.
Yeah.
But yeah, no, he was good. He was in Hawaii, so it sounds like he had some audio issues on the YouTube version of it, but it was all good on the Twitter stream. But he's been kind of like maybe not as OG of an investor as you going back to 2012 or something, but he's just been a very active member in the Tesla Twitter community for a long time. Has some really good takes, I think, and he's kind of solid in the road. He's not in uber bull Tesla territory, but he still just looks at all the data and becomes incredibly optimistic from that. So yeah, I've been kind of Twitter friends with him for a long time. We've had some phone calls here and there, so it's nice to actually get him on the channel and have more of a kind of detailed chat.
Yeah, I met him at the TeslaCon event, and he's a very nice guy, very easygoing, easy to get along with. I like him a lot. So I listened to it, and I thought you guys did a great job. So thanks, Bradford, if you listen to this. Appreciate you coming on to guest host. And so let's get right into it. Macro markets, I guess today is actually a very reboundish day. Tesla specifically is up, over 10%, and all the EV electric vehicle stocks are up 10 to 15%, it feels like. So there's like a broad-based macro market rebound going on right now. Growth stocks and, NASDAQ's up almost 3%, I believe. Yeah, it's after a 3-day weekend and sort of some serious volatility last week. It feels like we're right back to where we were on like Wednesday before the sell-off on Thursday. Massive sell-off. So it's very emotionally distressing at times. I mean, you feel good on days like today, but you feel twice as bad when it's down 4%. There's like some study that says we feel twice as bad when the market goes down an equal amount versus how much you feel good when it goes up. What are your thoughts about this volatility, Matt, in the macro markets?
Yeah, I mean it's been emotional. I think is a good word for it. I mean the ups and downs have been super extreme in both ways. It's everything's just been hit so hard lately that it's not surprising to me that we have kind of a rebound here. And the guys at Spot Gamma, I think they kind of gave an indication that we might see this type of bounce. And then it might be short-lived, frankly. So
Yeah.
you
And
need
for
to
people
kind of
that
be
are
guarded with your optimism.
real quick, for people that are not familiar, Spot Gamma, they're sort of like a index options niche expertise, and they give analysis on, also stock options, but index options. They have a real niche in that analysis. And around the quarterly expirations, I think their analysis is probably more relevant, especially. So there was a quarterly expiration of options last Friday. So anyway, go on, Matt.
Yeah, so I mean, the vast majority of the time, looking at index options isn't going to tell you anything about where the market's going to go. But it just so happened that this past Friday was the biggest options expiration day since I think it was March of 2020, which was like right in the middle of the COVID dip. And so you saw a pretty nice rally after that. And essentially, what happened is there was a huge amount of put expiration yesterday,
Yeah.
or yesterday on Friday. And so you had all these kind of negative delta dollar positions which were closed out, and so you got like a chunk of notional value back. If you want to go and kind of re-hedge with another position, say 3 months out, well, you can't get as much delta dollar exposure for something 3 months out that's compared to 1 day out that was expiring on Friday. So just the removal of all of that kind of negative delta dollar exposure from the market, they were estimating could lead to a rally. And so I think that's kind of the most logical driver that I can see of what's going on with markets today. But I mean, also things have just been hit so hard. It kind of like, I think it's been a little bit too hard in a lot of really high quality stock names. So, I think it might be reasonable just to see a bit of a rally here.
Yeah.
What are your thoughts? I mean, how much weight do you give to kind of the options expiration versus other factors?
Yeah. I mean, I think there's just not like I think like you were saying in Spot Gamma's analysis is there's not a lot of money flooding back into the market for like buying stocks. It's more like a lot of hedges going on, a lot of hedges being taken off, and that's moving the market right now. And the options expire. A lot of these put options expired in the money. The Delta dollars, exposure is not re-upped for the next quarterly options expiration. So a lot of these hedges are put on again for September. The quarterly options for index options, that's what the institutions, that's what the big money uses for hedging, right? Because they're so liquid. You have a higher multiplier for every, index option contract versus a ETF or stock option contract, for example, too. And you get broad-based hedging against the macro market. And I think, there's enormous volumes in these, and they actually drive the market significantly. So that's my thought. And you might have had a number of these institutions kind of re-up their hedges for September expiration, but then they pick lower strikes of them. They're not buying in the money puts for September expiration. They're buying out of the money puts again that are like 5 or 10% out of the money, maybe 20% of them. I don't know what their it's probably all over the place. But if the market creeps back down continuously towards their at the money or towards their out of the money index option put options, and then they suddenly become close to at the money put options, then the market makers on the other side have to short a bunch of the index to stay delta neutral, and that creates a sort of an exacerbating effect on the market going down further. So it seems like that's been happening the last couple quarters, and we'll see when it stops. Is it going to be another quarter of that, or are there enough people on the sidelines that find valuations so attractive that they just sort of flood into the markets enough to counteract that, and the market kind of starts continuing up again? That's a multi-trillion-dollar question, I guess, right now.
Yeah. I mean, this past Friday, it was about $700 billion of notional value of options that were expiring.
Wow.
Mostly
Yeah.
puts. And so, yeah, it was 2-3 months ago when people were worried about things, they put on these put positions, and then as the markets went down, those, as you were saying, Emmett, those became in the money puts, and in many cases deep in the money puts. And so, when those expire, it's just like you can't go and put another $700 billion notional value of puts on for 3 months out, and do it with the same kind of for the same price as the options that were expiring on Friday. So
Mm-hmm.
yeah, I mean, I think it's a real question how much money is sitting on the sideline. I mean, a lot of the indicators I'm seeing are like I think Goldman Sachs had some note about like just kind of a record amount of shorts were put on by hedge funds last week.
Yeah.
So it's there's certainly a lot of kind of potential bad news out there, but I mean, sentiment is just at like an absolute low, and so I
Yeah.
wonder, like, to me that seems like a possible indicator that we've gone down too far. But I mean, we've talked a lot about how we're not exactly macro experts. We
No.
obviously have to dig into this stuff, but
Yeah.
what this whole downturn has kind of shaped my thinking is like everything's like deep cuts across the board. But I think there's going to be some of these companies that stay beaten down and probably die and never recover. And then
Yeah.
there's others like
Rivian, Lucid.
Tesla.
Yeah. Go on.
Yeah, I heard you cough there. Didn't quite hear what you said.
Oh, yeah.
um,
Rivian, Lucid. Yeah. Sorry.
no, I know, just kidding.
Oh.
Um, it wasn't funny, a funny joke on my end. No, but like Tesla's, depending on how you do the math, could be trading at like a 40 PE or something like that. And I struggle to see a scenario where if they continue to execute operationally and deliver financial results, like I think they're likely to do, that they could stay down at that kind of beaten down level for very long. So I think
Yeah.
we're gonna, at some point we have to have a divergence of, okay, everything's been beaten down. Who's gonna kind of re-rally to even to higher levels, even if there is, maybe they're not the pre-pandemic highs or whatever. But
Yeah.
I think we got some room to run potentially in some names once earnings start coming in.
Yeah, and the macro market gets stable. That's the whole thing. I mean, it's unfortunately it's the Fed and their language. We're hanging on to every word they say and the tone of Powell's talking about things. It's like I hate investing like this where you have to really just like hone in on the Fed, and that's what's most responsible for your 401k or your investment trading account right now is not picking stocks, because most days it's like I look at my screen and all the stocks are red, or all the stocks are green. It's
Right.
like it's not like it used to be. We're in this weird time where we're just hanging on the word, every word of the Fed, waiting for Powell to say whatever he needs to say to get everyone to understand, like, okay, the interest rates are stable. We know what's happening. Inflation is stable, whatever it is. I mean, it's just right now it's so macro market driven. It sucks to be an investor of stocks at this point. Like, I'm not a macro market investor. I never wanted to be, and we're kind of forced to try to be. And there will be a time where this ends. I hope it's very soon. I don't know if it drags out like this for, another few weeks or a few months or into next year. I have no idea. That's the hardest question to answer right now, I think.
Yeah, I mean the Nasdaq's up almost 3% today. I mean on no news, and like for the Nasdaq to move 3% on no news, like that just never happened before. You know,
Yeah,
like it used to be like there'd be some crazy GDP number or something like that, or like all the
yeah,
major companies would come out with earnings that were like way above estimates, or there'd be some sort of piece of like good news to drive a rally that hard. So
yeah.
the types of movements we're seeing on no news right now are pretty astounding.
Yeah. Yeah. I can't wait to have the days where like half the names are in red and half the names are in green. There's always lump baskets or industry, like a whole industry might go up, but a couple
Hmm.
other sectors or industries are down, but we don't even see that anymore. It's like just everything's green or everything's red most of the time. It's frustrating. And Bitcoin, I mean, what surprises me the most is that you have people lump crypto and Bitcoin together. I know, like, Michael Saylor's like, anyone who says Bitcoin and crypto together don't know what they're talking about or whatever. Yeah, for if you're a maximalist, right? But the reality is Bitcoin is lumped
Yeah.
together with crypto. They're highly correlated within each other. People think of them as a category in a lot
Hmm.
of ways. And so what surprises me though is the whole crypto category is sort of so correlated with the growth tech stocks. And I mean, it's you would think like one of the biggest arguments for crypto all this time, or especially Bitcoin, was it's an inflation hedge, or it's uncorrelated to the market. It's like an uncorrelated asset.
Yeah.
But it's not the case. It's just another speculative
I
investment
mean,
of some sort.
Bitcoin would be over $100,000 or something right now if it really wasn't
Yeah,
inflation headed. You're like, oh,
yeah,
finally, there's inflation. Like,
yeah.
Bitcoin to the moon.
Bitcoin.
But
This is what I was waiting for. Come on, Bitcoin. This is why I got you. And now it's down 70% or whatever. From its high. So. Um, Yeah, I mean, it's disappointing as a crypto. I've had Bitcoin since 2011 myself, and I've seen lots of ups and downs. And I thought maybe we were fine. It's always been very speculative, and it's not always correlated to the market though. But now it's very correlated to the market because it's become so much more mainstream almost.
Mhm.
Um, so I don't like that it's correlated now, because in the past it was not correlated.
Right.
But I also don't like that now that it's more mainstream, that it's also not an inflation hedge. And that's why you buy gold. That's what my argument for owning some Bitcoin is, the digital gold. And that's why people buy gold, is because it's an inflation hedge. So I'm a little concerned on that. I mean, it's still very young. There's a lot of good use cases for Bitcoin, particularly. All the other crypto, Ethereum has its own use cases. What are your thoughts on Ethereum, Matt? I know you follow Ethereum a little more closely than Bitcoin. And what are your thoughts on that?
Yeah, I mean, I like both Bitcoin and Ethereum in the longer term. The thing I like about Ethereum, and you could go way down in the weeds on this stuff, but
Yes.
there's so much stuff that's essentially like being built on the back of Ethereum. So essentially, like as a layer one, crypto asset, they're building out the framework so that you can have kind of security and transparency. And then there's just a lot of super smart people that are kind of building applications on the layer two, where you can essentially use the security of the layer one to do all sorts of like NFTs. I'm not super, I think those are kind of dumb for the
Yeah.
most part. There's probably some
Yeah.
good use cases like for concerts and stuff, and like musicians using them in the future. Um, but like the fact that you can do stuff so much more cheaply on the layer two, and there's all sorts of folks that are building really interesting things. I mean, it kind of goes into this whole, like, I think DeFi is like it's broader than Ethereum, but I think it's mostly Ethereum, to be honest with you.
Yeah.
And so, but it's kind of interesting because a lot of the assets that are failing are kind of like centralized versions of things that are run like claiming they're DeFi. So
Yeah.
it's kind of crazy.
Like
You've
what
got all these,
Celsius was doing, I
yeah,
guess, right? Yeah. how are
Yeah.
they generating these like 20% returns if you give them your Ethereum to hold or Bitcoin to hold? Right. I always wondered that. And it never felt, a lot of people were like, oh, it's great. There's just the DeFi, it's the process. And they don't really get into specifics like mathematically to show how it's like and maybe it's very complicated. Not anyone can, but I personally never felt comfortable with all this DeFi stuff where you're like giving someone your crypto and you're getting a 20% return for,
Yeah.
supposedly nothing, and it just seems so fishy to me from the beginning, all the DeFi
Well,
stuff,
that
to be
should like
honest.
that's because that shows that you're a good investor because that sends off your spidey sense and says, okay, that doesn't sound quite right. And so, I mean, there's a lot of
Yeah.
stuff that has these crazy names that you've never heard of that it's very hard to kind of make sense of
Yeah.
the
And the pay
language
to
and the
play
lingo in the
stuff.
space.
Yeah. What
I
was
think,
the other,
yeah, I think that's
what was the,
overrated.
yeah,
Axie
that's over. What was the
Infinity.
game? Axie Infinity. That was a huge
Yeah,
thing. And I was never bought into that. I could see the excitement, but I just felt like like a more complex pyramid scheme of some sort, like, a lot of these things are just pyramid schemes at the end of the day. Like they don't produce goods and services, like a
yeah,
stock does, like a business does, that when you own a piece of a business with a stock ownership. So unless it's its
yeah.
own store value, it's part of some virtual world. We're all going to be part, maybe Axie Infinity, if that was going to be like the virtual world that we all are going to participate in the future, then maybe there's a grounding for what they're doing. But if it's just like one of these one-off video games that people are playing, it's nothing super special. I don't understand how that pay to play model can work out in anything unless it's like an actual. I think in Roblox, there's actually some kind of opportunity.
Yeah.
Like, what do you build for? I was listening to an interesting podcast. I'm trying to remember what it was. It was like some venture capital people. And what do you build first? Do you build the pay to play infrastructure that Axie Infinity sort of built first and built some moderate gaming experience, some like regular basic gaming experience, or do you build a fantastic metaverse gaming environment that everyone's drawn to and then insert a pay to play infrastructure within it? I think
Mhm.
that's the model. And I think if you do
Yeah.
that order of operation that way, it will be tremendous. And so I could see, Roblox potentially in the future having some kind of amazing economy in that way, because they're building out right now this incredible metaverse like world for lots of young kids, especially, and they're all going to be growing up using this, and a lot of older kids are sticking with it, as shown on their stats. So it's interesting to see how this is going to play out in the next 5 to 10 years. But there is something with the pay to play, is what I'm saying. But
Yeah.
there's a lot of false flags right now with it.
Well, there are. I mean, like it's probably a good thing because a lot of this stuff, a lot of the pyramid scheme stuff needed to get burned down. Like that's just like that's
Yeah,
helpful. And Three Arrows Capital is like a very large crypto hedge fund that's sounds like they were getting kind of margin called as these prices were going down, and then they kind of like revenge traded like on the way down and got
yeah,
burnt even higher. So then like all these exchanges and everywhere where they had their accounts all had these forced liquidations, and these guys like kind of who were incredibly well respected within the space before this all happened just like ghosted everybody and like went away. And so like I think the call for greater regulation that a lot of people are calling for now is going to be a good thing ultimately. Although
yes,
I do think that's going to cut against the inflation hedge and all those other arguments because
yeah,
then like once it's regulated and once you get like real blue chip like institutional investors, not like these wild west hedge funds that are kind of doing
yeah,
whatever they want right now with very little clarity. Once you get like big money in there, they're going to be even more correlated to to the stock
yeah,
market, honestly.
yeah, yeah,
So but yeah, Evan
absolutely.
Glansman has a comment, or was it Breakfast Pizza, I think, in here that Ethereum is centralized junk. Yeah, it was Breakfast Pizza. It's like I think there's a lot of centralized junk within the Ethereum universe, I would say, but like Ethereum itself, it's very hard to call that centralized junk, just because like Vitalik Buterin's by far like the most well-known like member of, he's like the founder essentially of Ethereum, and he's proposing all sorts of stuff that never gets implemented. So like even he, who's like so well respected
Can't
within the
direct
space,
it. It's
he
too
can't
big of
direct
a
it on
boat
his,
for him
yeah,
to control.
exactly.
Yeah,
So I think
yeah,
they'll be successful with their merge, and I think there's a lot of misunderstanding in the space. So I'm kind of bullish about that actually. And
mm,
you mentioned actually, Emmett, that you can't really value these like actual companies, but Ethereum to me is interesting because you actually can do like a discounted cash flow on it, just with their, the gas fees that they're generating, and how that kind of flows back to all the Ethereum holders. So
Mm.
it's a little bit different than a
It
typical
becomes a little
ETF
bit
that
like
you would do.
an equity after the staking or something, right? It generates some
Yeah,
cash flow. That's what I'm
yeah, it
told.
does.
Yeah.
Yeah, so like the gas, and we've probably spent too much time on this already,
Yeah.
but it's
Yeah.
it's interesting. So I think it'll make it. I think Bitcoin will make it, and I think it's probably going to be a good thing that a lot of the other projects died. And there'll be some projects, like I don't know what other layer ones might make it, but I think there's going to be a couple things that make it that have other attributes. But it's just a
We'll
very
see.
complicated space, and I think it's hard to paint it with a broad brush.
Yeah, yeah. Still early innings of crypto, the category of crypto, I would say. People maybe thought it was like middle innings, but maybe it's still like very early innings, and the volatility is just evidence of that. So moving on to, the transition, the Bitcoin impairment charge Tesla's going to have to take. I mean, it dropped to what, 17,000 or something over the weekend. I was camping, so I was out of
Mhm.
cell phone range, but I saw it had dropped ridiculously low on like Friday or Saturday or something, right? It was like
Yeah.
17,000 Bitcoin, and that's a pretty big impairment charge now. That is going to be like 500 million or something. I don't know. I mean, it's around that,
Yeah.
right?
So yeah, I think if it is in the 17,000 range, my understanding is, and I've heard it described a few different ways, and I'm not clear which way is right, but I believe it's
Hmm.
actually based on like the closing price at the end of the month, or at the end of the
Okay.
quarter.
Hmm.
But I've also heard some people say that it's actually based on the lowest price that Bitcoin gets to within the quarter.
That's what I
So
heard too. Yeah.
if it's the latter, then yeah, that would be certainly more of an impairment charge. Probably a little bit higher than $500 million, I believe, because I think at like 19,500, somewhere in that neighborhood, it was 420 million.
Hmm.
Gary Black had a nice
Yeah.
tweet.
Yeah.
Hats off to him for flagging the 420 level. Um, so it's going to be, regardless
Close to
of
500
like,
million, maybe.
close to
Yeah.
500 million is kind of
Four
kind
to
of
500
what
million.
I'm ballparking. But I mean, it's
Yeah.
a non-cash expense. It's a write down.
Yeah.
So like I'm sure it'll cause some headlines,
Yeah. It'll cause
that'll be
headlines.
negative.
Hmm.
But I think, and Tesla investors need to kind of keep in mind like that really doesn't matter. Um,
Hmm.
so, and again, I've said this before, but it just shows how stupid the accounting is
Yeah.
around this, because you get marked down on the way down, but you can't ever get like marked back up on the way up unless you sell.
Yeah.
So to me, it's just like one of those accounting rules that doesn't make any sense. So I hope that changes eventually, because it
Yeah.
just it, it's kind of
What?
silly how asymmetric it is.
Yeah. And did you see the Elon interview from last night with I think we touched on it. We both listened to it with Qatari Bloomberg conference or something, and I guess that was he was
Mhm.
doing that at like it must have been like 2 in the morning or something Texas time, or one. He was doing it very late because they said at the end it was 3 a.m. New York time when they were doing it. So I mean that's
Yeah, and he was
Elon
wearing a
works all
suit.
hours. Yeah, he's wearing a suit. I mean, he's showing respects. He called, he said, "Thanks, Your Highness." He said the appropriate language when he was introduced. That, just giving respect to the group there. Do you think there's, and I think there was referenced, or do you think there's a number of investors in that crowd that he feels compelled to show up for, just because they're part of the debt backers of the Twitter deal?
I hadn't thought about that point, Emmett, but it actually makes a lot of sense. I think,
Hmm.
he doesn't love doing interviews. I kind of gather from the way
Yeah,
he talks
two in the
about them.
morning too. Yeah,
2 in the morning, and especially with like kind of traditional media outlets like that. I think some of the fans who ask like new or different questions, I think he tends to enjoy those a little bit more. But like, you could just
yeah,
kind of tell from his demeanor that he wasn't loving some of the line of questioning around some of this. But yeah, I do think it probably makes sense that he would show that extra effort to kind of get the Twitter deal done. I mean, a couple of weeks ago, I was really skeptical that he even wanted to move forward, but after the meeting he had with the Twitter employees, and then this
yeah,
point you just made around this Bloomberg interview,
yeah,
I think he's very clearly trying to move forward with it
yeah.
in my mind. So
He
I
said
think it's
there's
it's interesting.
Yeah, they asked him about it, and he said there's three issues that need to be resolved for the Twitter deal to go through. The first is I think this is his kind of leverage that he's holding on to as long as he can, is the percentage of bots. Clarity around how is 5%. What's the real number of bots? How are we going to figure that out? And I think he's willing to kind of go past that if everything else works out. But I think it's like a one of his bargaining chips he's holding on to potentially exit or just try to strong arm them for less of a valuation, which I'm not sure that will happen or not. But the other 2 points was um, he's waiting for the debt to part of the acquisition to all get lined up and all the people
Yeah.
supporting that and that's what made me think of the audience there. And I think there's some Middle Eastern people involved in that or groups. And then the third thing was the shareholder vote. And then it's funny, just like 5 minutes before we came on here, so this was like a few hours after his comments, I saw the Associated Press report that the Twitter board is now asking all of the shareholders to vote. So they're trying to move this forward. The Twitter board hears those three things from Elon. That's probably the only communication they hear. And they're like, oh, let's just knock out that third thing right now then. And they're probably like getting all the share because they're trying to get this done as fast as possible. They want to get that
I don't get
44
that.
billion valuation,
Yeah, for sure.
in this market, So I wouldn't be surprised with the shareholder vote very soon. And then it's just those two things. And yeah, maybe this gets done by the end of the summer, or sooner. We'll see. I don't think Elon wants it to drag out for super long either. And, he just, don't let perfect be the enemy of good kind of thing. And just, I think he sees a lot of good in being able to take over Twitter and reshape it for the future. And 5 billion valuation difference, don't let that ruin the deal or something, so that's what I'm thinking. Maybe he's thinking.
You think he, just to get it done, would do it at the original price?
I think so. I mean,
I think if push came to shove, he would, but I
yeah,
think he'll probably try to get it lowered a little bit, and
yeah,
probably with the leverage of the lenders, that may be a good tool to say, hey, listen, I can't finance 54 or the 54 share price.
44
So
billion or whatever. Yeah.
yeah,
I agree. He'll try, but I think when push comes to shove, he'll still try to do it
yeah.
at the like if it's up to him, he'll still do it at that price. But yeah, he'll try certainly. That's my thought. Yeah. So yeah, that's interesting. We'll keep a close eye on Twitter and that. And going back to Tesla, my full self driving, I've had it for two weeks now. Full self driving FSD beta. Sorry, I shouldn't call it full FSD beta. I've had it, and it's been really impressive. I mean, I was telling you, Matt, yesterday, some impressive feats it's done, and driving in lots of crowds of people. And I'm nervous. I'm holding it, but it sees all the people and seems to interact with people's, hand gestures on the road or like their body language of whether they're going to cross or not. There's a little bit of a delay, but it gets it right. It seems like, but I'm still watching very closely. So I think it reminds me a lot of when autopilot first came out. What was that, like 2016 or 17 or something? And the first few times I used it, it was very nerve wracking. And I was like, oh, it's interesting. Maybe they get it better. Hopefully they get it better. It's like cruise control, but not something you're really comfortable using passively. You'd have to watch it and be nervous.
Yeah.
And so it reminds me of that. And then surely enough, like within a year or two, the autopilot became so seamless that I'm like, it's so smooth. And I think Elon even called it smooth as silk once, and that's stuck in my head. It is like that, the autopilot on the highway. And so to me, it feels like it's only a matter of time, a year or two at most before the FSD beta becomes smooth as silk almost for all the other driving. But I'm hopeful, and maybe it'll be much sooner. It seems like it's progressed a lot in your time of having it, right, man?
Yeah, I mean, it was absolutely terrible when I first got it in October, and then yeah, I think it was an update I had in March, which it was just like 10 steps forward. Like 90% of my issues were gone. This last update though has been pretty bad for me, to be honest. But it's
You have some
mostly in my own
errors, right?
neighborhood. Yeah,
You're having some.
it's got this thing which apparently was widely reported for some other people, but then it was corrected somehow. But where it would just like panic and turn off and turn the emergency flashers on and try to like pull over to the side of the road. It does that in my little subdivision like all the time. Like if I have a 90-second drive to just get out to the main road, it'll turn itself off twice and just say, oh, autopilot can't figure out what to do, basically. So it says like a system error.
Yeah.
And so it's strange because there's usually no issues whatsoever. And I have a lot of issues in my neighborhood and like turning out onto my main road. I've got this left turn, and it always wants to turn left onto this busy road, but then it'll like turn into the shoulder and just start driving onto the shoulder on the other side.
Yeah.
It's so strange because it's not that
Bizarre.
complicated of a turn, But then like the other day, I was turning out of a super busy grocery store parking lot with like cars going fast both directions, and we had to wait a long time to find a gap. And the first second there was like a gap, it just like accelerated very confidently, perfect turn right into the road. And I was like, that was way more complicated than turning out of my neighborhood. I don't understand why
Yeah.
it like handles the complicated things
Yeah.
better a lot of times than the easier ones. So yeah, I'm kind of just looking forward to the next iteration. I know everyone's experience is different, and that's something to be expected. But yeah, right now it's the version I've got right now has not been my favorite.
Mm, yeah. Yeah. Well, it's one step backwards, two step forwards. You're kind of in, yeah, it's funny that your car has these kind of errors and mine doesn't. Every car seems to be, you think all the cars should be identical, but it seems like every car has its own little characteristics within the updates that, give or take certain pros and cons. It's weird. Um, and you did some drives even with like Dirty Tesla that like you guys were following each other and they behaved slightly differently in certain areas, I think, right? So,
Yeah, yeah, it's strange. I mean, there's no accounting necessarily for why it chooses to do certain things, but I mean, the thing I would say is it's really important to keep in mind the trend, and the trend is just a remarkable improvement from what I had, 9 months ago, I guess it was now, since I first got it. And so yeah, I think
yeah.
it's going to be the sort of thing that they just keep knocking out more and more complicated things, and then you're going to have fewer of these two-step backwards updates, and eventually
Yeah.
it'll be unusual when you have an intervention. So how long that takes,
Yeah.
I'm not sure, but
Yeah.
in my mind, I think getting to the single stack and then iterating from there is going to be the most important thing, because they kind of are
You
in
know what that
this.
reminds me of?
Hmm,
Going to the single stack and it reminds me of when they got off Mobileye. Do you remember that?
yeah,
I don't know if you were there,
I
but they had
mean,
this Mobileye, like very smooth highway autopilot driving, and then they decided to go fully, get rid of Mobileye's stuff entirely and do it all themselves. And it was like unsmooth for a little bit, but sure enough, there were certain cars that still had the Mobileye technology that were still smooth, but the newer cars for like 3 or 6 months, the autopilot was very rigid and like not great, but then sure enough, it got a lot better after that. Like created so I feel like the single stack's going to be a little bit like that, like maybe a step backwards, but it'll provide a base for it to really go progress much more over time. That's my
yeah,
feeling.
I kind of think there's going to be some step backwards, which is why it's taking them so long to move to that.
Yeah.
So like it's kind of optimized to this, local maximum, like Elon likes to say, and that's kind
Yeah.
of unfortunate. But I think the sooner we can get to that version, it was going to be 11, I think. They're probably onto like
Yeah.
14 or something now when single
Yeah.
stack finally goes out. But once they get to single stack and can start iterating, and
And the single
that's
stack, just so people know, I think that's just vision only. Everything's just all vision, the same neural network for both highway and non-highway driving, just like one continuous neural network vision only algorithm or program. Is that what your understanding sort of is?
Yeah, well, it is all vision only right now. They had disabled the radar, but like there's a different software set that handles the highway
Yeah.
driving
Like two
versus
different neural
yeah.
network softwares or something. Yeah.
So it should be one neural network that does city streets and highway, but also like parking lots and summon. And
Yeah.
that was one of the things like there hasn't been an improvement to summon basically since 2 years ago or whenever the heck that came out. So it's still
Yeah.
terrible, and like parking lots are still terrible. So
Yeah.
they need to kind of move to that. And I think single stack to make those improvements, and
Yeah.
I'm very excited to see what that actually looks like.
Yeah. The reverse summon will be super cool. Like you go into a crowded parking lot,
Yeah,
you're just like, "Oh, let me out." I took my kids to a Dave and Buster's for their birthday last week and it was like crowded parking lot and you have to find parking, drive around for a while and it'd be so cool if it could just drop me off right in front of Dave and Buster's with my kids and we can go into it and then my car figures out the parking situation by itself in the parking lot. That'll be neat. That'll be very helpful. But you got to be
yeah,
very confident. It'll be a while before like I'm
I
not going to
know.
do it the first time, like the first few times I'll watch it very carefully and there'll probably be some bugs, but at some point we'll be confident with it. And yeah, I think Gary Marcus, who we had on our interview, and some other skeptics of FSD beta, one of their biggest gripes, I think, seems to be that people are going to get so comfortable with it where suddenly there's going to be a spike of accidents and deaths, more than if FSD beta didn't exist. I just don't see that happening. I don't know. I mean, the data will show, the proof will be in the pudding. But I think Gary Marcus said like he thinks predicts in 6 months there'll suddenly be a spike in auto accident deaths for people using FSD beta because people will be comfortable. I just don't see that being the case. What do you think?
Yeah, it's interesting. Yeah, I saw a chart recently, which was pretty informative. I dig it up, but it would probably take too long. But essentially, the idea is as the software improves, then driver attentiveness will decrease, and so
Yep.
there will be uh, people are so panicked right now, essentially driving full self-driving beta. This is the argument of the Garys and other folks in the world, that they're so attentive that they are more safe than a regular driver just because they're so attentive, because they think their car is going to kill them at any given moment. Which I think there's a somewhat reasonable argument for that. I don't really completely buy it, but their contention, which I think they're claiming as fact, and it's not true, is that as the software gets better and better, people are going to be more and more lax. They're going to be looking at their phones. They're going to, not pay attention, and the software on its own will be less competent than an average human driver. And so that combination of bad software, but that's good enough to get you comfortable, will result in more deaths than the average human driver. That's their contention. I think it's an interesting conversation to have, but I definitely don't buy it. And I think it's there's a claim of kind of moral superiority that a lot of them have, that Tesla's being reckless by pursuing this. And I think they're not examining the flip side of that coin, which is if this software can save lives, it's actually morally objectionable to delay it or to
Yeah.
slow the rollout of it. And so
Yeah.
I think
Yeah.
these counterfactual non-deaths that don't happen because of full self-driving beta are just swept under the rug. And so I think there's a good conversation to be had there sometime. I think we'll maybe try to have someone on to discuss those options a little
Yeah.
bit.
Yeah. And staying on Tesla, I mean, a big I see Chadwick had a question, something I wanted to bring up to you also. Chadwick said, "What are your thoughts on China Giga Shanghai delivering over 46,000 cars in the first 19 days of June?" Um, so, I mean, I saw that report just like an hour or two ago on Twitter too, and that's a huge number of deliveries in just 19 days. Yeah, so there's 11 days left, and if that proportion continues, then that's like 70,000 cars, close to that for the month of June. I mean, that's going to be a record. You know, as much as we're expecting a slowdown in Tesla's quarter to quarter delivery number because of the Shanghai shutdown, this has got to be really good news if Tesla delivers 70,000 cars from the Giga Shanghai in June, so I don't know, that might counteract the negative perceptions of the July 2nd, purchase and deliver production and delivery numbers that are going to be lower than last quarter. What do you think, Matt?
Yeah, so I hadn't seen that report. I'd like to dive into it a little bit more. The first question that comes to my mind is, it says delivering, so that implies that there's some, probably May production that was delivered as well. So I think
Yeah,
it's hard to necessarily extrapolate. It's not that they produced and delivered 46,000 cars in June. So how much of that is just kind of inventory from May, which was delivered in June? I think that's a really important distinction before we get too carried away with
yeah.
those numbers. But I don't know. I do have some optimism that maybe things aren't quite as bad as some of the
Like
doomsday,
Troy Tesla
kind of.
suggests.
Yeah, I mean, well, he's like, his numbers seem very reasonable. Like when you go through the math and you go through the rationale of why he's, putting out the numbers that he's putting out, it makes some sense.
Yeah,
But Tesla has surprised like
a few
so much
times.
the last several quarters, that it wouldn't
Yeah,
really surprise me all that much if instead
yeah.
of say 250, they delivered 270 somehow.
Yeah,
Um,
and a lot of
so
times Troy Teslak, as accurate as he is, you might even see him updating his number. Like if it's becoming if it Tesla is going to actually surprise, then it will become more apparent to Troy Teslak in the last like week or two of the course. In the next 1 or 2 weeks, it would become more apparent to his surveys, and he would be updating his estimate from whatever it is. I think he's published like a 250,000 or somewhere close to that a couple weeks ago, and so if he starts updating it to 260 or 270,000 the next like week or so, then he could still show that he was right at the end of the quarter, but he was actually wrong sort of all the way up until now when he's updating it suddenly in the last 2 weeks to 270,000. So we'll keep an eye on his forecasts and if he's adjusting his numbers, because he's usually not that far off at the end of the quarter from where Tesla actually reports it. He's usually
Mhm.
within like 3 to 4% at the most. I think there's been like 1 or 2 quarters he's been more off, but for the most part, he's very close. So it'll be interesting to see if he's updating, his estimate in the next 11 days or not.
Yeah, yeah, because those, he has his historical accuracy. It's like 2%, 3%, 1%, like each quarter. But his estimates within the quarter, that's always based on his final estimate, and his
Yeah,
estimates within the quarter can swing pretty dramatically based on
yeah,
how news comes out. So,
yeah.
it's not that he'll give an estimate for let's say Q3 in 3 months, or sorry, in 2 weeks, and that's going to be like within plus or minus 2%. Like there's no
No,
way he could be that
yeah.
accurate. So,
Yeah,
yeah,
exactly.
it's important to
And
keep
he's
that in
done
mind.
yeah, and to be fair, I think he has disclosed, I can't remember what the rate percentages, but he's aware of that and mentioned that in some of his posts, and he has disclosed his historical accuracy of like his first estimate at the beginning of the quarter to what it actually turned out to be at the end of the quarter, barring all his adjustments. And I forget what that is. It's still pretty impressive, but he's been off
Yeah.
more than like 10 or 20%, I think, a couple times from that. So, you know, we'll see. Um, and then speaking of Troy Tesla, like there was an interesting tweet he put out over, I think, the weekend or something, and Jim Chanos actually replied to Troy Tesla, like something about, Jim Chanos is a well-known, skeptic and short of Tesla. I'm not sure if he's still short, but he's historically been very short Tesla, and he's famous for being short Enron, I guess, and making a lot of money on that when Enron fell apart. But since then, Jim Chanos has been wrong on a lot of things, especially Tesla. But he's still
Yeah.
committed to the short thesis of Tesla, and I think a comment he brought up was something about with the global or the political risk between the U.S. and China getting escalated with Taiwan, especially something about like all the profits that Tesla is generating from its Shanghai factory, which obviously we all know is like the majority of Tesla's profits at the moment come from that,
Yeah.
um, are at risk of Chinese repatriation risk. So China might suddenly say, hey, everything you're making here in our country, the profits of that have to stay in China and can't be, put in US dollars or whatever. And, that risk the market, if that happened, then the market would value Tesla very differently, of course. Right. So what are your thoughts on that, Matt? You think that's a realistic possibility ever yeah.
I mean, I think it's unlikely, certainly unlikely in say the next 2 years. If think I mean that would be a very bold move by China to essentially like nationalize a factory or to not allow for repatriation. I mean that'd be breaking all sorts of international treaties and frankly
Yeah.
like the agreement that they had with Tesla when they set up the factory. So they wouldn't do something like that very lightly. And I think they're probably more prone to try to steal Tesla's IP and use it to prop up the other like Chinese actual like national EV makers. To me, that seems like the type of Chinese intervention that would be more likely. But let's like go with the worst case scenario where they essentially nationalized the factory and that's it's gone. That would certainly be bad news, especially if it happened like right now. But looking forward to the Tesla of like 5 years from now, which is what we really try to do for the most part. By that point, they're going to have a lot more plants all over the world, and so like the 1.5 million units of capacity that they're trying to get to in Shanghai, that's nothing to sneeze at, but it's not like it's 80% of China's or of Tesla's output or anything like that. And
Yeah.
and the other thing to keep in mind is like if they actually solve autonomy, then sure losing the plant hurts, but it's like it's not the sort of thing that's an existential risk to the company, I think. And so it's like
Yeah.
both unlikely and not as fatal as Chanos would make it out to be in my mind.
Yeah. Yeah, I would agree with that. Yeah. It is something to keep an eye on, I think, just to see if the language, between, Tesla and, I mean, the US and China, it's not like two people having an argument. It's like two gigantic, corporation, or two of the largest countries or economies in the world, and countries, going back and forth with each other on certain issues, like about Taiwan's territorial integrity or the Strait of Taiwan or whatever. That's just one of like 1,000 things that they probably disagree on, but there's like 100,000 things otherwise that is fine. And like right now, the Tesla production and car companies in China, the business infrastructure between the U.S. and China that's working is working fine. You don't have any escalation on that at the moment with anything. But who knows if I think Trump made a big deal about tariffs on China and tried to create a financial kind of conflict with with China and the U.S. And if that type of language comes back in another political election, then China might have to react and do something on its end to counteract it. So we'll see.
Yeah, I mean, they could do something, but like you kind of think about it from China's perspective. It's like, let's say you could have like 15 billion of margin coming out of that plant down the road. That's not realistic today, but like, would they risk like, severe, economic issues with the United States for like a
Yeah.
$15 billion like margin plant? I don't know. It would have to be
Yeah.
part of like a much bigger dispute, I think. And to me, it smells of like Chanos just moving the goalposts again, because he's been wrong about everything for the last 15 years on like everything.
Yeah.
So it's like,
Yeah.
well,
Yeah.
sure, they
Yeah.
built the plants in record speed and it's like 10 times more profitable than I said it would be. And
Yeah.
like Tesla's killing it, but that can't last. Like China.
Yeah. 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 I know
Well,
it's crazy. So I guess let's move on to the Q&A. So anyone listening right now or watching live, this is recorded on both Twitter Spaces and YouTube Live. And the format is, we talked about macro markets. We did some crypto, Bitcoin volatility discussion, talked about Tesla and Elon and Twitter. Now the last 15 or 20 minutes we reserve for just Q&A of everyone. And Alec, our behind the scenes kind of engineer, isn't there, but Matt's kind of helping to post some questions here while he's not there. So first from Pinnick0753 on Twitter.
some numbers, bunch of numbers.
Yeah, yeah. Will slower than expected 4680 ramp affect quality of vehicles? Matt, what do you think?
I don't think it's going to affect the quality of vehicles, because like the solution to slower than expected ramp of 4680, like the solution is to do the 2170 line, which is the reports are they're putting in that line right now.
Yeah.
So I think it'll affect the earnings potential possibly, and the cars that are going to have the 2170s won't have some of the characteristics that the 4680 cars will have. So that's to the extent you want to call that a quality of vehicles issue, you can. But like, I've got a 2170 Model Y right now, and I can tell you I'm very happy with it. So it's not like the sort of
Yeah.
thing that customers are going to demand like a 30% haircut because you got a 2170 car. So I don't know.
Yeah.
I kind of think like I'm optimistic about 4680 for sure, but I kind of think Tesla Bulls put a little bit too much stock in it as like 4680 is going to like change the company forever. And to me, it's like an iterative step in the direction of incremental
Yeah.
profitability, lower cost, better manufacturing efficiency. And it's going to be a great thing once they ramp up to it, but we shouldn't be surprised that it takes a long time. What do you think?
Back when they had Battery Day, Tesla was like much less lower valuation than it is now. Maybe like I forget what that was, like 200 billion valuation or something, or I don't recall exactly, but it was a much lower valuation than where it is today. And so the 4680 vision, you could see, the market cap, valuation of this 4680 kind of unit within the Tesla conglomerate could really be instrumental for the stock price to get it to 500 billion or more, but now that Tesla's, floating between 600 billion and a trillion market cap, and full FSD beta has become closer to full self-driving, and we can see kind of the light at the end of the tunnel on that now, then the 4680 is still a big deal, but there's other things that are an even bigger deal now, and so I think that's the difference. So I'm still super curious and excited about 4680 and the production, how that could change battery production, and it's a monstrous thing, but it's one of many monstrous units within the conglomerate that Tesla is. It's not the most monstrous that it used to feel like it would become.
Yeah, I completely agree with that sentiment.
Yeah. So from Tesla Maniac 32 on Twitter, do you think a recession could be a positive catalyst for Lemonade as people look for cheaper options in their daily lives? That's an interesting point. That's it's very possible. Yeah, that could be a nice knock-on effect for Lemonade. I think I really want Lemonade to close this Metro Mile deal as soon as possible and uh and get the car insurance rolled out. It's funny, Jim Chanos I like to follow the people on Twitter who I disagree with a lot, and Jim Chanos is one of them. Sometimes I agree with him on certain things. It's funny, but on a lot of things I don't in terms of stocks and stuff. But he did put out a quote about Mile and Lemonade just yesterday, the other day, or he put out a tweet about that or commented on someone else's tweet that he thinks they're both going bankrupt, and anyway, I replied with our 2-minute short video we put together on that a while back, but didn't get anything. But yeah, I mean, I think that it's all about the car insurance rollout, and I hope they do that sooner than later because like this question suggests, people are going to look for cheaper alternatives to car insurance. Different types of insurance. Look for cheaper credit cards. They'll look for cheaper everything to cut costs. I think too.
Yeah, I kind of don't think it'll be a positive catalyst if that does happen, but
Hmm.
I don't know because I think younger people potentially moving back in home with their parents would be a negative catalyst potentially. But like
That's
the
true.
fact how quickly we've seen in-force premium grow has been pretty remarkable, and so that's the thing that I'm looking at most closely.
Yeah. The next question from Angad1357 on Twitter. How low do you think Tesla can go, and what are the chances of it decoupling from macro due to rapid earnings growth? I don't think it's going to decouple from macro as long as macro is moving up and down like it is altogether, like 3% at least once a week. It seems like maybe it's like 5% every couple weeks, moving up or down together. It's like it's very volatile. When we get back to the days of the macro kind of being more tight in a tighter bound of like 1% moves per day, you know, um, or less, then that's when I think it decouples and it's more of a stock pickers market in general. Um, what do you think, Matt?
Yeah, I kind of agree. We touched on it a little bit earlier, but I think macros hammered everything across the board, and um, I try not to get too specific on like how low it can go in the medium term. But what I like to do is go out to say 2023 or somewhere a little bit further out and do like a bear case. What do I think if Tesla is not as profitable and they don't sell as many cars and whatever? Just put in a bunch of bear assumptions and then put in a bearish multiple on that, then that gives you a certain floor. And then you kind of do a base case and you can do a bull case if you want to. And so that's the kind of analysis I like to do. And I don't necessarily want to share my takeaways from those because I think that gets into investment advice territory. But it makes me pretty comfortable with where we are right now, I would say.
Yeah. Next question from Clancy Ryan on YouTube comments. Matt, can you please discuss the stock-based compensation by Tesla employees, not including Elon, and the impact of effective dilution that it has? Uh, yeah.
Yeah, so it's essentially everyone's familiar with the stock-based compensation that package that Elon Musk had, where essentially he got a large ownership percentage of the company if Tesla hit certain operational milestones. But there's another piece that is going to continue after that CEO compensation plan is completely vested, which is pretty close to right now. I think there might be, I don't know, 50 million or something like that left that'll hit the income statement. But you know, normal Tesla employees also get a slight benefit of some stock-based compensation. So I don't remember the exact amount offhand, but it may be somewhere in the neighborhood of like $200 million or so of like a book expense. It's a non-cash expense, so a lot of times it gets added back to adjusted earnings per share. So analysts tend to back it out. But it is a real expense in that it creates a dilutive effect. So if they're let's just assume for sake of argument that it's $200 million each quarter that goes to paying employees via stock. Well, that $200 million has to come from the company issuing new shares. So the share count is going to go up, kind of continuously over time. And so as you're valuing the company, you need to account for that future dilution. So it's a pretty small amount. I mean, when we were talking with Drew Dixon about it, he made a comment of something like it had been, I forget what it was, something like 12% or more over the last couple of years. But that was because there was a huge acceleration of Elon's highly dilutive stock-based compensation plan. But something in the neighborhood of a few $100 million each quarter on a company that has a market cap of close to $1 trillion, it's like you got to keep that in perspective. Like that's not a huge needle mover, and it's helping you to kind of attract talent that is highly aligned with your mission and the financial objectives of the company. So in my mind, it's a cost well worth paying, and you don't need to be overly concerned about the dilution, because you're talking about just a drop in the bucket each quarter.
All right. Next question from Martin Muldoon. Hello, Martin. Question: any thoughts on the Rocket Lab launch on Saturday? If successful, will it move the stock a point or two? I mean, Rocket Lab is, it's getting, for a while, I felt like every Rocket Lab launch I was following closely and excited for, but it's almost to the point with like SpaceX where like, I got a while ago where like every SpaceX launch, it's like, I don't even think about it because it's just like so common. And Rocket Lab's not super common yet, but they haven't had any failures in a long time. And they're like, unless there's something, I don't know. Is this launch Saturday? Is it part of like the capstone mission or
It's the
something special?
capstone moon
Oh,
mission.
so it is an
Yeah,
important one.
yeah,
Okay. So that's an
yeah.
important one. I'm not sure, even though it's a special mission, I'm not sure it's going to move the stock. I've seen special. Yeah, I mean, they've had some other special missions, the helicopter practice catch. They've had some others that people thought would be like somehow big enough news to move that stock. I'm not sure that there's going to be one mission that moves that stock. I think it's like sort of a space industry thing. Like people have to start valuing the space industry again, and it's sort of a industry or sector thing. And Rocket Lab will, once people do diligence on that, they'll see that Rocket Lab's cleared number 2 to SpaceX, and it'll be wild. It'll be valued much higher than where it is now. That's my thought. But what do you think, Matt? Do you think that this capstone moon mission is going to move the needle for the stock?
I don't think so. I mean, it's just we've seen this with Rocket Lab before, where other big missions haven't done anything. So sometimes there's been like an after hours move, and then it gets washed away the next day. So you could see something like that. But to me,
Yeah.
I kind of view Rocket Lab as like being in the position that Tesla was in, say, I don't know, 2014.
Yeah.
They're not profitable. People don't understand the company. Um, and it's going to take like what ultimately turned Tesla's prospects around for that long stretch where the stock was just moving sideways, was when they finally became profitable in 2019. And so
Hmm.
looking at like Tesla at Rocket Lab's like financial just efficiency, I really see a very clear path where they do that. I mean, they've got a $500 million backlog, and they've got just like this threadbare operating expense line, and they're super capital efficient. And I'm like, all right, just give this a long enough timeline, and I'm pretty comfortable that they're going to get to the point where they're very profitable, and then that'll probably happen right around the same time that they're achieving their long-term mission of like providing satellite-based services back to Earth, which is going to be like recurring high margin revenue. Um,
Yeah.
so I think I'm hopeful that the market kind of figures this out sooner. But in my mind, this is a much longer term play that you want to just kind of stick around for at least 5 years and watch
Yeah.
how it pans out.
Yeah.
All right. Maybe last one after this.
All right. So this is the last one, or one more after this?
Um, I think
We'll
this
do
is
that
probably
one
the
more
last
after
one.
this.
Let me see if I
Okay,
can.
this is the last one. All right, or one more. All right, from this one is Angad on 1357 Twitter. How do you view leverage in this environment? What percent margin, if any, are you currently comfortable with? Um, yeah, I mean, in our fund, it's risky, right? Our fund is meant to be the risky portion of an investor. Our investors who invest in mine, Matt's discretionary trading. So, it certainly uses a lot of leverage through options and such, and margin occasionally, but we also have stock, and we're free to deleverage. It doesn't mean it has to always have leverage on, but we try to be a little risky in it. So, but in our personal accounts, I don't know, me personally, my personal account, I've tried my best to reduce all of my margin. Um, and I think I've almost gotten there, but I owe a ton in taxes. So I don't know what that's going to result in. I'm probably going to have to do more. But yeah, Matt, what are your thoughts on this? I guess I think, if you have a side basket of money that you agree to that you could lose potentially, but be very risky with, then maybe that side basket of money, that's how I always thought of it. I'm very aggressive with it, and I'll trade it with margin and leverage, and be prepared to lose it all. Just like I go to
Yeah.
a casino, I could potentially lose it all. But if it works out, it could be an incredible return. But in my main personal investment vehicle or savings, for what I have to live off on, I am not risky with that using margin. What about you, Matt? What do you?
Yeah, I've hardly ever used margin. I've used it a couple times here and there, but yeah, just for me personally, like I don't sleep well, when I'm worried about, oh, what if the stock's down like 50% tomorrow? Or, I just go to these unrealistic scenarios I found. So where I like
Mhm.
to have, or I would say I'm more comfortable having some, risky kind of exposure, is just through the use of options. So like if you have an option that is itself inherently risky, but okay, I can only lose as much as I put in, that's the kind of, position that I can feel pretty comfortable with, because I can say, all right, and
Yeah.
I know that, if this goes to zero, I'm not going to lose my house. I'm not going to, have to sell
Yeah.
everything. So it's very, to me, it's just easier to kind of risk manage options than to, say buy a bunch of stock and go on margin. So I've never been comfortable with that. I don't think I've ever gone over like 10% on margin, and even that was only for a short amount of time.
Mm.
But
Yeah.
everyone's different, so it's your own kind of risk reward profile, honestly.
Yeah, absolutely. And the one thing that's I think people have to be conscious of with options as well, and we've talked about it personally when managing our fund and such, is a lot of the options that people look at for the long term options, the leaps. Um, you have to be very careful because the spread, bid offer spread, can be very wide. We were looking at one the other day. It was like $6.10 at the bid and like $10.20 at the offer. So it's like
Yeah.
the bid offer spread is like almost half of the option price. Like it's like, where do you get filled? Like that's a huge expense. So be very tricky. I mean, it's very tricky to cost effectively buy or sell one of those very widespread options. So just be careful on that. That's all I would say. You don't want to screw yourself out of by paying 40% more for a premium option premium that you could have saved and bought more of that, or bought different options or different companies using that 40% you overspent on that one. It
Yeah.
requires patience, I guess. Yeah.
So Emmett, since I'm in charge of the questions today, I'm gonna let you choose. So we've got a question about Lemonade's expenses, and we've got a question about a potential eurozone crisis for the currency. Which one should we end on?
Lemonade expenses, I think,
All
and
right, no more
let's do
macro.
that. No more macro.
So
Matt,
it's for me,
how
but I'd be
quickly?
curious your thoughts
Okay.
too.
Oh, how quickly are you modeling for Lemonade's expenses to rise? Do you believe 2022 could really be peak loss? Um, how I would answer it is, I would say, well, you have to talk to my partner Matt about the modeling stuff. He's big on the modeling stuff for the Lemonade expenses, and for a broader, big picture point of view, I do think 2020 I think 2023 could be the worst year for Lemonade in terms of losing money, worst case. And if they lose money beyond 2023, my thesis was probably wrong. So if they're losing more money than after
Yeah,
2023 than they
yeah,
did
yeah.
2023, my thesis is probably wrong. So that's what I would say. So Matt, do you want to kind of go into any more details on that stuff?
Yeah, I mean, I would agree with the way that you laid it out. I think there's a reasonable chance that 22 is the peak loss. It wouldn't surprise me if it leaks a little bit into 23. But when I'm modeling this out, it's really kind of shocking how big of an impact, the growth in in-force premium per customer has on kind of like the peak profitability level. So getting the expenses right, yeah, that's definitely important. But like the expenses, like I've said this on this channel before, but I think it really bears repeating. The marketing that they're doing doesn't make sense for the lifetime value of the customers that they currently have. Like if you look at how much in-force premium per customer they have, expected lifetime value, and say like a 25% loss or a 75% loss ratio, which means they keep 25% of that, they shouldn't be spending as much on marketing as they are. But what you've seen is that this in-force premium per customer is growing like really drastically each quarter, which is a really, really good sign. So you've got exponential growth in customers, and then you also have linear to exponential growth in in-force premium per customer. So that tells you that you're growing your customers, and those customers are bundling and they're spending more money with you each quarter. So it like changes to that will have a very drastic impact on how quickly or on when they reach peak loss. And frankly, much more so than, whether operating expenses grow at 10 or 15% per year or 25% per year. So I bundled this out in a lot of detail, and the expenses, I think they do need to get them under control. I'd like to see a little bit like tighter cost management around that. But ultimately, if they are successful on the top line, the bottom line won't matter nearly so much. So I guess that's how I would answer that.
All right. Great. Well, hopefully next week or the week after, we'll do a demo of your model and give some new estimate for Tesla, the Tesla stock, and with some inputs based on what we think Q2 production and delivery numbers are, or maybe we'll do it the week after when we'll probably have production delivery estimates. Maybe we'll do both. I don't know, but we'll go through Matt's model spreadsheet and show it on the YouTube live channel at least. And so let's have some interesting interviews coming up. We have a roundtable discussion about raw materials and batteries for Tesla, and mining and such. So we'll put that on our channel when we release it, after we record it, and some other stuff. So everyone, thanks for joining us. This is recorded and it's on our YouTube live channel and Twitter Spaces as soon as we end it here. So thanks, guys.